Talking Business, a podcast produced in Melbourne, Australia. The podcast is available on the Acast site, my own website, the Apple Podcast Store, or wherever you go to get your podcasts. Or you can get it at the Business Acumen website at www.businessacumen.biz. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from our website, leongettler.com. I am Leon Gettler. My job is to review and monitor the week's news in business, finance and economics. I bring it all to you every week. This is episode number 14 in our series for 2025, and today's date is Friday, May the 16th. First, I'll be talking to Gaid Buch, the founder of Promeet. It's a company that is revolutionising the creator economy by developing a platform that allows users to monetize their online meetings and streams using blockchain technology. The company aims to eliminate third-party intermediaries, reduce fees, and give users more control over their earnings. Promeet offers a simple and frictionless experience for both content creators and viewers. With a competitive 5% fee on transactions, Promeet provides a more affordable alternative to traditional platforms. And I'll be talking to RMIT economist Sinclair Davidson about Australia's economic challenges with tax reform and productivity post-election. But first, let's talk to Gaid Buch.
Well, Gaid, how would you describe Promeet? What exactly is it?
Well, first of all, thank you for having me on. First thing I can say about Promeet that's going to get you through this real quick is going to be like, we created this thing that basically takes Zoom, Google Meet, Teams, and we combine it into one place that actually takes if you're aware of OnlyFans, Twitch, Kick, all those platforms, you can monetize your audience, but we combine them into a tool that you don't have to register, you don't have to have a profile. You can just start monetizing and having meetings, paid meetings, with micropayments. That's a high level.
So how do these micropayments work?
So basically we use blockchain, crypto for that matter. We're using a stablecoin, USDC, if you're familiar with it. And basically we're coming from blockchain and we've been to this space for 10 years and we have some successful companies we built. And right now we thought that the majority of products out there for blockchain is more about trading, trade finance, tokens, and so on. That attracted a lot of bad environment into this market. So we thought nobody's actually using blockchain for a real-time usage in today's world. So we took the blockchain and basically the number one problem with blockchain is that it's hard to get people from Web 2 to go on crypto and starting their own wallets and buying tokens and actually using them. So we created a product that basically when you log on to Promeet with your social or with your email, with your phone, whatever, we built a wallet on back of that. So you just have to identify yourself with a Google account, Apple account, whatever account you have. And on the back of that, we basically generate a wallet that is a self-custodian wallet. So people are actually using Promeet. They don't know that the back office for this is blockchain. Without them knowing it, it just gives them the capabilities of micropayments and instant payments and so on.
The problem with blockchain is it's very complicated for most people to use.
You're right. You're absolutely right. And this is exactly why we built Promeet, because when you go on Promeet, you'll never know that you're on the blockchain until you're going to understand you're on the blockchain. So that's exactly it. So when you start a wallet, right, let's say this, you start a wallet on blockchain and you want to get a wallet and you start, if it's for trading, it's for consuming or for whatever, you have to have a password, you have to have 12 words you have to keep and all this complexity into this. We took all that complexity and we moved it into something that nobody feels. So basically when we generate that wallet, we put you on the blockchain without all the hassle.
So who are the main users of this?
Main use That's a very good question because we are in the first. Basically, we attracted this to anybody that's doing online business. Let's say yourself also involved. So if you want to do a webinar, for instance, if you want to do webinars, so you have to sell tickets, you have to send the Zoom links, right? There's a lot of back office that you have to work before you do that. So for instance, on Promeet, you do it instantly. So everybody comes up, they pay as soon as they come in, they pay by the minute, they stay on it. Down the road, you're going to have pay by the session, means once you got to the event, you pay for the entire session, or you have the option to pay by the minute. So main users coming from yoga, can be doctors, can be lawyers, can be anybody that do anything online, streamers, content creators, gamers, anything that you want to do online, you want to get paid instantly without all the hassle that you have in today's market. So I'll break it down a little bit to see how the market is and where we're trying to tap into. For instance, are you aware of Twitch?
Yes.
OnlyFans, Kick? Of course you are. So those platforms are monetizing platforms. Basically, content creators go on theirs and try to monetize their fans, their followers onto those channels. The fees that they're charging are pretty high because they are social platforms, right? Basically, OnlyFans, Twitch, and although they're a social platform, they are bringing the content creators and they bring the followers and they create a marketplace. And now you have to conduct all this in one place, right? And all this. This is very, very, very heavy on creating another one. And you can see every day, every week, there's new platforms coming in, coming out, and so on. That's why we are here to change, basically. All the users that you can think of. OnlyFans using it, right? That people that do yoga instructors, right? Gamers, people that use Patreon, people that want to monetize their supporters, right? So you have Patreon, for instance, you can buy products, you can buy posts, you can buy pictures, you can buy videos, all those. Everybody who wants to make money online, doing live streaming, doing meetings, need to use Promeet. I even give you more of an example. For instance, you're using Zoom for now. Zoom is only up for 45 minutes. After 45 minutes, you need to have a subscription with Zoom on a yearly basis, monthly basis, and so on. Promeet, for instance, is for free. You can do the same meetings, better quality, easier to get on, and it's free forever. That means you can do live stream on, or even a meeting for 3 hours. It will never cost you money with Promeet. So basically, we're tapping into a few markets with this, but our main market is for content creators who try to monetize their profession, their hobbies, their passions. And by using Promeet, I mean, when you're using traditional platforms as Twitch, OnlyFans, Kick, YouTube, TikTok, whatever, basically you work for the middleman. You work for those platforms. You bring your content, they put you on the marketplace and so on. So basically you work for them. You don't work for yourself, because at the end of the day, they take you between 20% to 50% of what you're going to make, which is a hard sell. So only the first 1 or 2% or even 5% of those content creators on the platform, those are the ones that actually can make money. The rest of 95% are not making enough money because of the structure of those platforms, which is the algorithm. And at the end of the day, it's really hard to beat the algorithm. So basically, we twisted the tables on this. We say you already have social. If you are a coacher, if you're a yoga instructor, if you are influencer, a gamer, whatever you are, you already have. The statistics show that every content creator have about 7 social they have to maintain. Now think about every time you have to go to a different platform to try to monetize those followers, you have to bring them on, and then again, the whole social game. What we're trying to do is we tell people, create a link with your live stream, with your meeting, and just share it on your social. Basically amplify your socials and bring your clients to Promeet. Now, not to Promeet, because Promeet is not a platform. Promeet is a tool. So basically, when you bring them to Promeet, you bring them to yourself, to your live stream, to your event. There's nothing else they can see on Promeet. There's no marketplace on Promeet. When you go as a viewer to Promeet, you're not going to see any events going on. You have to know the people to go on those events. So you have to follow them on socials, or you be part of their email list or whatever.
So you're using the socials very much as part of Promeet.
Yes, we're just saying that at the end of the day, your crowd, your audience is already following you. There's no point trying to get them on Promeet, have a social account, have a profile, follow you again, all this again. We say we're already doing it pretty well out there on social. All you have to do is have a gateway that people can come and pay for the content that you provide.
Okay, let me ask the obvious question. How are you making money out of it?
That's a great question. We are charging 5% from any transactions that's being made on Promeet. So basically, we don't make any money until you make money. And also 5% compared to the market is relatively very, very low.
So 5% of every transaction?
Yes, sir.
So it's pretty much a volume game for you people, because the transaction would be very low.
Yes, you're right, because Promeet enables the micropayment. That's what we do. That's what we enable at the end of the day. So when you try to consume any content online, it's based on subscription and with some strings attached to the platform, to the content creator, and so on. What we here to change is the subscription and the fact that you can charge as low as 10 cents for anything that you want to do. So that's basically liberating part of the world. And because we don't have barriers on payments, because you can get payments from anywhere in the world, so we open up a new market for people that it's hard for them to consume and to sell their product because of the minimum. So if you go online, the minimum subscription you're going to see on those platforms is going to be anywhere between $5 to $10, right? We think that if you're going to do a live event and you're going to charge $1 or $2 for that event, and people will pay for the time they only spent on it, that's a new economy that's going to help a lot of people.
But 5% of $1,
right?
You're going to have a lot of that, won't you, to make
yes, when you look at this as a business strategy, you have to start where people need you. And I think people need us on those micropayments. But right now we're talking about live streams. Down the road, we're going to have that possibility to have videos or any content you want to put on it and actually charge micropayments for that. Today, if you want to do that on today's platforms, that's going to be a minimum of $10 to $15 to watch it. And then you have to split the revenue 50% with the platform. So here we're thinking that we're starting at the levels that's going to be micropayments, but at the end of end of the day, because of the freedom that it gives you, the opportunity to do it from everywhere, and there's no registrations, nothing restrictions around it. We think at the end of the day it's going to be amplified to bigger and bigger clients and bigger payments.
Right. Okay. But you're starting small.
You have to start small. You know other better way to start?
Right. Okay. 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 So you'll be building it up, obviously, from that.
Yeah, it takes time. Taking time to build something right takes time, and you have to start with the smallest bricks, and those are going to be your wider and your strongest foundation at the end of the day. And we think there's a lot of people out there with a lot of content, a lot of talent, a lot of ideas that people wants to see, people wants to watch, and it's intriguing, and it's live at this point. And we think live is a section that is missing from today's world. So in some way, like back in the days when you used to have a TV guide, right? So you used to wait to see what's coming up live, right? What's going on right now. And we're thinking that the world is a little bit, people are going to be a little bit more intrigued of something that's happening right now than something that's being produced and transcript and so on. And we think that live is the thing that people will pay to see, to watch, and to consume based on, they pay by the second. So if they don't like the content, they can just jump off of it and move to the next thing they want to watch. So we think this is the future. No more subscription, no more strings attached to platforms or people or to anything. Total freedom for the content creator and for the viewers.
Well, it's quite revolutionary. And Gaid, thank you very much for your time.
Thank you so much for having me.
And now let's talk to RMIT economist Sinclair Davidson.
Well, Sinclair, the Labor Party has won an overwhelming majority now. But the question is, where do we move forward on issues like tax reform and productivity? No one's had anything to say about that.
Not at all. It's quite interesting to observe that neither party actually had a good tax story or a good productivity story or a story about the economy going forward, even though we'd been told this was a cost of living election. So none of these things have been presented. But bearing in mind, the government now has a solid majority in the House, and certainly the pressure is on them to deliver in these areas because that's what the electorate is going to be expecting to be seeing over the next few years. I definitely feel we have to do something about productivity in almost immediately. We are facing a productivity crisis where our productivity levels are falling dramatically. That's taking our cost of living down. The challenge for many politicians is that they don't want to talk about productivity because a lot of the electorate interpret that means is you've got to work harder. But in actual fact, in order to maintain our standard of living, which is also falling at the moment, given the productivity fall, we are already having to work harder just to sort of stay in place. So this is certainly very crucial. Government and business and the unions are going to have to get together and do something about this pretty quickly, or the economy is going to be starting looking very ugly very soon.
Well, one of the issues I find with productivity is, I mean, when you compare it to other countries like the US, parts of Europe or Israel, is that companies have actually invested very heavily in their business, in technology and stuff like that, which actually lifts productivity. We haven't seen that sort of investment here.
We have not, and one of my arguments for why this is happening is a thing called regime uncertainty. And regime uncertainty isn't, the government might fall or that sort of stuff. But in actual fact, the policy space in Australia has been very fluid for the last 15 years or so, more or less since the end of the Howard government, is that politicians have sort of not wanted to speak about productivity. There's been a lot of making things up on the run. There's been, quite frankly, poor governance, and business requires some level of certainty in order to want to invest in Australia. They haven't done that. If you have a look at our tax burden, has actually increased over time. And not only the tax burden increased, but taxes have changed in ways which are not good for business. So it makes long-term planning very difficult. One of the things that did come up during the election, which of course nobody understands, is instant asset write-offs. That should actually be permanently implemented. At the moment, it's a rolling over affair. That should be permanently implemented, perhaps not for major businesses, but certainly for smaller businesses. And at the same time, having multiple layers of environmental regulation, so you have it at the state level and at the federal level, and you have to comply with both simultaneously. We should actually decide one level of government is going to do that, and then have that level of government doing it. I would prefer it to be done at the state government level, but there are good arguments for doing it at the federal government level as well, but not at both the state and federal at the same time. So those sorts of things actually make it harder for businesses to plan in the long term.
Tax reform is quite crucial. And look, last time we had tax reform was under the Howard government with
Yes.
GST.
Yes.
We haven't had that now in 25 years.
It's been shocking. If you think the last time we had a serious discussion about taxation at an election was 1998. If you remember, since then there was some talks, oh, we'll fiddle and we'll change it, what have you, but there was a full-on serious debate about tax reform in 1998, and here we are 27 years later. The GST came in 25 years ago. I think the GST has been incredibly successful because one of the challenges with the GST is we've seen in Europe is that the rate tends to ramp up very quickly, which John Howard actually locked it in at 10%. And it hasn't changed at all in the past 25 years. And it often gets brought up, we should change it, but there's absolutely no political appetite to change it. The challenge then becomes is our income tax rates are far too high. Our corporate income tax rate is far, far too high at 30%. Now, for Australian investors, that doesn't matter too much because we've got dividend imputation. But for foreign investors, that 30% is certainly very much a burden that they don't always want to pay because they can go through Ireland and get 15%, or they can go through the Bermudas, the Bahamas, they can go through Singapore and get much lower rates of taxation. We do actually need to realize that we are in a world where we are competing for capital. And one of the levers that we do have control over is the corporate tax rate, and we should be doing more to lower that corporate tax rate. This is not welfare or a subsidy. This is actually getting people into jobs, working, creating value, selling stuff.
But that also means changing the GST. And the big argument about that is if you increase it, it becomes regressive and people will suffer. So you're going to have to adjust it at certain levels so that it isn't too regressive for everyone.
Yes, and I almost suspect that is undoable. We have got into this mindset that whenever anybody talks about changing a tax rate, if all you have to do is find one person who is disadvantaged by this, and then all of a sudden the whole thing falls over. We have had in the past politicians who've stared down the camera barrel and said, this is actually what we have to do and why. And yes, we know it's going to impose a cost on people, but this is how the system is supposed to work. I remember many years ago when I was discussing the GST, I would have journalists phoning me up saying, do you know this poor person is paying more tax? And I would say, that's actually the policy design. They're supposed to pay more tax. That's how it's supposed to work. So we actually do need to have more politicians having serious discussions where they actually say to people, this is how it is supposed to work.
But that would mean increasing the GST.
That is a particular route to go down. I certainly wouldn't support that myself until I saw what the offsets were on the other side. There's also a generational thing going on here, Leon. You and I are both in the situation where we are soon going to be paying a lot less income tax anyway, and I don't want to start paying more GST, having paid high levels of income tax in the past. So being a bit selfish here, there is this. But at the same time, if you kind of think of millennials and Gen Zs and what have you, these guys can't really afford to pay the same rates of income tax that we have paid in the past, simply because they're also loaded up with housing debt, they're loaded up with HEX debt. So we've loaded up sort of younger generations with high levels of debt. We're expecting them to pay high levels of tax. And that actually is a problem which governments are going to have to look at some point. I would also be looking at the spending side of things. We can't afford to have programs like the NDIS, for example, growing at 8% a year, when the economy is struggling to grow at 2.5% a year.
The NDIS will have to remain.
It will remain in some form, but it will have to be very heavily curtailed. That's also a very difficult discussion to have. So politicians have got choices. They can have very difficult discussions to have on taxation, difficult discussions to have on spending, or difficult discussions to have on both. So these guys, if they're doing their jobs properly, and that of course is always a big if these guys are doing their jobs properly over the next 3 to 6 years, they will be earning their money.
And of course, one of the big issues too that this campaign ignored on both sides, Labor and the LNP, was, for a start, the enormous geopolitical challenges of the US and China. Secondly, the runaway house prices.
Yes.
So younger people can't buy property. And so I think there's I think there's a big change in the voting public, not between left and right, but between under 45s and over 45s.
Almost certainly. I've actually just gone through the process of buying a new house. And the stamp duty that I have paid on my new house is more than the house I first bought 30 years ago. That's just the stamp duty. So not only have governments been standing with their hands out taking more stamp duty, but they've done nothing about the fact that housing prices have accelerated far beyond. And what we saw at the election was both sides stimulating demand for housing, not doing anything about the supply of housing. And we very much have a supply side problem. Then on the geopolitical risks, this was fascinating to watch because it seems to me, over and above sort of local domestic economic issues that weren't really well canvassed at the election, the biggest challenge facing Australia is managing the strategic interaction between the Chinese and the Americans. So the Chinese are our single largest trading partner, and the Americans are our geopolitical security partner. Okay, so this puts us sort of slap bang in the middle. What we have with the Liberals is a very poor history of xenophobia. When they were last in government, the relationships between the Chinese government and the Australia dramatically collapsed. Now, the challenge that I have there is I'm a firm believer in comparative advantage and trade and all these sorts of stuff. You don't have to be friends with your trading partner. All that you have to do is want them to buy your stuff and their money to be good. So, when you are trading with somebody, you're not expressing some sort of preference for how they live their lives or what they do. You're just saying, here's our stuff. Give us your money and we'll all be happy. So the Liberals have a problem with xenophobia. And to their credit, the Albanese government worked very hard to restore that relationship on the trade side of things. Then we had Mr. Trump. During the campaign, when they asked Mr. Albanese and Mr. Dutton about Trump, Dutton said, I don't know him. How are you possibly going to argue that you would have a better relationship with Mr. Trump when you've told the nation you don't know the guy? Whereas Prime Minister Albanese said, look, we have a relationship. I've spoken to him. We'll continue to work, yada, yada, yada. I mean, sort of very reassuring sounds. But the Liberals were trying to position themselves as we can deal with Trump and they don't know the guy. That struck me as very strange. So that relationship is going to be very, very important. I think we've been lucky to get away with 10% tariffs. That's the sort of minimum on everybody, on all his friends sort of affair. But certainly, I think there's going to be, if you read what people are saying, it looks like Mr. Trump actually wants to set up a geopolitical order where the Chinese are being confronted. Now, I don't know if this is good or bad in a geopolitical sense, but I do know that this places Australia in a very risky position in terms of our trade and our relationship with the Americans.
Indeed. And all that means is that Albanese and Jim Chalmers have pretty full plate.
Absolutely. And not just them having a full plate. I think the leaders of the House and the Senate, because it's all very well having policies, and we've seen this over a long time. You've actually got to get your policies through the Parliament. And certainly there's no problem with the government getting their policies through the House because now they've got a good majority, something we haven't seen for a long time. And certainly I think the electorate are sending the signal to the politicians, we don't want a revolving door of prime ministers anymore. So they've got a good majority. Getting things through the Senate again is always difficult, but I don't like the excuses that we often hear. Oh, we try to do something good, but the Senate said no. It's actually their job to get things through the Parliament, and they've got to get good things through the Parliament, and that means speaking directly to the electorate for a start, selling this to the population, and then selling it to their representatives.
And also negotiate.
Yes. But you've got to have a good story to negotiate. And if you kind of look what Hawke Keating, Howard Costello did, they would come along with good policies, and then they would also say these policies are so good that we can actually afford to buy off the losers. We haven't had those sorts of we'll buy off the losers for a while because we haven't really had good policies. They bring in things that can't point to the economic value add of what this is going to do.
Well, Sinclair will watch that with a lot of fascination.
Great stuff. Thank you for having me, Leon.
So what's happening in the news? The weekend of negotiating in Geneva, the United States and China said on Monday they reached an agreement to temporarily reduce the punishing tariffs they have imposed on each other in an attempt to defuse a trade war threatening the world's two largest economies. In a joint statement, The countries said they would suspend their respective tariffs for 90 days while they negotiate. Under the agreement, the United States would reduce the tariffs on Chinese imports to 30% from its current 145%, while China would lower its import duty on American goods to 10% from 125%. The agreement breaks an impasse that had brought the trade between China and the United States to a halt. Though the agreement is limited to a 90-day period, its implications are far-reaching, providing space for businesses to regroup and for markets to reprice risk and reward in real time. Analysts say the apparent upbeat move in the Swiss city of Geneva stands to give both powers interim political relief at home without appearing weak on the trade war battlefront. Matteo Giovanni, a non-resident associate fellow at the Centre for China and Globalisation, said, "The United States is under political pressure to show wins. China, on the other hand, sees negotiations not as a singular outcome, but as a strategic process to manage bilateral competition, economic resilience and long-term development goals." Others were more cynical about the deal. While we remain sceptical that anything of substance would be agreed upon after only 2 days of trade talk, it's clear that both sides are looking to de-escalate the situation. Win Tin, global head of market strategy at Brown Brothers Harriman and Company, wrote in a note, "One overriding question has significant implications for the negotiations to come. Did Beijing or Washington flinch first? Trump on Monday claimed victory, saying he had engineered a total reset with China. Trump struck a conciliatory note on Monday, a contrast to his campaign rhetoric. "We're not looking to hurt China," he said at the White House. That contrasted with his rhetoric shortly before last year's election, when he mentioned China 26 times in a November 4th rally in Pittsburgh. "We're going to tariff the hell out of China," he said at the time. Meanwhile, Hu Jin, the former editor of the National Communist Party tabloid The Global Times, said on social media that the deal was a great victory for China. "The US has chickened out," said one popular Chinese social media post of a deal. Economists agreed that the United States might have overplayed its hand by raising the tariffs too quickly and too high. "The US blinked first," said Alicia Garcia Herrero, chief Asia-Pacific economist at French investment bank Natixis. "It thought it could raise tariffs almost infinitely without being heard, but that hasn't been proven right." When President Donald Trump launched his trade war on the world, he issued a stern warning: "Do not retaliate and you will be rewarded." China ignored the warning. It was rewarded anyway. So this week, Trump largely suspended his trade war in return for nothing but promises of ongoing discussions. There's a lesson here for everyone Trump threatens, whether countries or businesses or universities. Standing up to Trump does not mean that you win, but giving in guarantees that you lose. An important piece of news that raises a bunch of questions: the Trump administration plans to accept a luxury Boeing 747-8 plane as a donation from the Qatari royal family. It will be upgraded to serve as Air Force One, in possibly the biggest foreign gift ever received by the US government. The plane will then be donated to President Trump's presidential library when he leaves office. Now, all this raises questions from Democrat lawmakers and good government groups. They've raised concerns about conflicts of interest and substantial ethical issues, given the immense value of a lavishly appointed plane and Mr. Trump's intention to use it after he leaves office. Sold new, a commercial 747-8 costs in the range of $400 million, which would make Donald Trump a stack of money when he leaves office. Critics didn't mince words about what they saw as a clear violation of federal law. The Qataris have an expansive array of business interests tied to the US, including energy projects and investments. Good government advocates also noted that Trump's family's business just announced it will build a new gold resort in Qatar, which will be developed in part by state-owned business. "The corruption is brazen," Senator Adam Schiff, Democrat of California, wrote on X. "Nothing says America first like Air Force One, brought to you by Qatar," added Senator Chuck Schumer of New York, the minority leader. "It's not just bribery, it's premium foreign influence with extra legroom." President Trump angrily brushed off ethical concerns about accepting a $400 million luxury jet from Qatar to be used as a new Air Force One, saying only someone stupid would turn down such an offer. Mr. Trump said that the gift from Qatar will be to the US Department of Defense and not him personally, and he said he would not use it after he left office. And Australia's new opposition leader, Suzanne Lee, has vowed there'll be no climate war in the coalition, as she followed the Nationals by putting the Liberal Party's commitment to net zero emissions by 2050 under review. Promising robust policy processes, Lee said there would be no captain's call on policy, including climate and energy, although she did commit to developing a new tax and economic narrative. Lee made history by becoming the first woman to lead the Liberal Party. How long she lasts as leader in a party that's divided remains to be seen. Lee became the first female leader of a Liberal Party in its history after pipping former Shadow Treasurer Angus Taylor by 21 votes to 25 to replace the vanquished Peter Dutton. And over on the Australian government side, dumped Industry Minister Ed Husic has revealed that Australians have endorsed a second-term Labor government with no plan for reviving living standards. Ed Husic has exposed how Treasurer Jim Chalmers rebuffed the dumped Industry Minister's first-term push for business tax incentives to drive a technology-based upswing in manufacturing capital expenditure. My argument has been that we need to have a growth agenda. That's how Husic began his brief but devastating critique of a Labor government that the Australian people have just returned to office with a thumping majority. That is, do more than throw more than borrow money of voters to cushion the cost of living squeeze while not dealing with the underlying problems of falling productivity, a decade of budget deficits, and a world upended by Donald Trump. Husic's call for Labor to burn through timidity that has shackled us in the first term goes straight to Anthony Albanese and Chalmers. I wasn't just talking about company tax, Husic said on the ABC Insiders program on Sunday morning. I also stressed the need for investment allowances to renew machinery, to see capex grow, to have a productivity burst as well, because it's good to have strong business, great jobs, and a strong economy that is well fueled into the future. That is something long term. I think that does need to be considered. We need to see business be able to invest and free up capital, but I'll be very careful how much I say, if you don't mind, because I've got a cabinet colleague in the form of the Treasurer who manages the tax revenues. Chalmers and Labor have been in denial about the weakness of business investment, which has been held up by spending on renewable energy and data centres. The budget papers describe business investment as being a record decade high, but the Business Council of Australia notes that business investment slumped to a 30-year low as a share of GDP in 2022 and has barely recovered. And former competition regulator head Rod Sims has urged the Albanese government to campaign on a carbon price and tax reforms at the 2028 election, while tapping its newly won mandate this term to boost productivity, project renewals, and fix a wayward electricity system. Mr Sims, an expert advisor to Treasurer's Competition Task Force, has issued an 8-part plan for reform after Labor's thumping election win a week ago. Both Labor and the Coalition were criticised for a lack of policy ambition during the campaign. Amid frustration, tax reform was discarded from the agenda. Mr Sims argues taking a reworked carbon price to the next election would boost productivity and help finance true tax reform should Anthony Albanese win a third straight term in its office. What about tax reform, Mr Sims says? It is true that the government does not have a mandate for this. It should go to the 2028 election seeking such a mandate, but serious tax reform needs to be paid for. The best way to do this is via a price on carbon to compensate for the damage fossil fuels do to our environment. The proceeds cannot just compensate households, they can also finance true tax reform and make it saleable to the electorate. Those who want true tax reform should get behind a price on carbon. The boost of productivity will be huge. Treasurer Jim Chalmers has signalled no quick fixes to address productivity reforms. After initially pledging Labor's second term will focus on productivity without forgetting inflation, the Treasurer told Nine newspapers a third term would be needed to deliver progress on productivity.
Mr Sims
And economist Ross Garnaut first proposed a carbon tax a year ago in a bid to raise hundreds of billions of dollars, but Labor and the Coalition rebuffed the idea in a rare bipartisan move on climate action. Australia is in the midst of its worst labour productivity records on level, falling 1.2% in the last year, with average productivity growth over the past decade hitting its lowest level in 60 years. The ex-competition SAR said action must be taken. The government does not lack a mandate for reforms to boost productivity, but it now needs to act on its mandate, Mr Sims says. Moves to drive productivity include harnessing digital technology, innovation, skilled workforce, and the net zero transformation must now be acted on to deliver tangible benefits to the economy, he said. And ANZ's new boss, Nuno Matos, has his work cut out for him. A Portuguese banker who was a contender for HSBC's top job after a stint running that bank's wealth and personal banking operation from Hong Kong takes on the ANZ job earlier than originally intended. The long-time banker, who made a brief foray into teaching at the Catholic University of Portugal, had originally been slated to kick off from July the 3rd, but events at ANZ, including a review of its markets business and a $250 million penalty from the prudential regulator, led the bank to bring forward the legislative handover to May the 12th. One of the new CEO's first meetings was with the bank's non-financial risk committee. That meeting is a clear signal from ANZ. It will prioritise the area after the Australian Prudential Regulation Authority warned the bank was falling flat flat in stopping bad behaviour from its bankers, which included manipulation of bond markets, massaging trading data to win government contracts, work meetings at Sydney strip clubs, and boozing on the trade floor. Mr Matos will also face tests in the coming months with the Australian Securities Investments Commission looking at how to proceed with an investigation into ANZ over allegations its traders manipulated a $14 billion government bond market. This could see ANZ face court in what may resemble a rerun of ASIC's case years earlier against the bank over allegations its traders rigged the bank bill swap rate. An Australian National University splurged $185,860 on a trip to Davos in January 2023, despite booking a $117 million deficit for the previous year for 6 staff members, including its 2 most senior leaders, Julie Bishop and Brian Schmidt, and star recruit Genevieve Bell. Not a good look. The lavish trip included a $78,500 party, including Australian wine for 80 guests, just shy of $1,000 a head. The trip included 6 members of ANU staff: Bishop, the University Chancellor; Schmidt, who was then Vice-Chancellor; Bell, who was at the time the Director of the School of Cybernetics but took up the role as Vice-Chancellor the following January, along with the head of the Communications and Engagement teams, a Communications Manager, and the head of Principal Gifts, ANU's philanthropic arm. The most extravagant expense was an ANU reception and networking event called Australia in Davos, attended by 80 people at a cost of $78,500. And that's it for this week. And next week I'll be talking to Ian Salteri, who developed the Kitty Pay app, which targets Gen Z and millennials, acknowledging their daily encounters with group spending. The app, loaded with customizable features, simplifies the process by allowing users to separate kitties for different purposes. Kitty Pay issues Visa debit cards directly linked to each kitty, facilitating seamless payments and expense tracking, whether for a casual dinner, a weekend getaway, or a celebration. Kitty Pay enables group members to contribute directly to the app using digital wallets like Apple Pay or Google Pay. A digital Visa debit card for the specific kitty is then issued for group-related expenses. And I'll be talking to independent economist Nicholas Gruyan about his innovative idea to set up a citizens' forum to resolve the US-Canada tariff war, which could potentially be expanded to Australia. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from our website, leongettler.com. If you like Talking Business, leave us a review with Apple Podcasts. Thank you in advance. In the meantime, you can find me on Facebook, Twitter, or X as it's now known, Instagram, LinkedIn, and YouTube. If you want to contact me, email me at leon@leongettler.com. I answer all emails. Also in my spare time, I have a copywriting business. If anyone needs newsletters, blogs, articles, or editorial, email me. Looking forward to the next episode of Talking Business.